Hello and welcome everyone to Silver Asset of the Day for the 24th of September 2021, presented by myself, Phil Carr, at the Gold and Silver Club. So as we get towards the end of the week here, what do you need to be aware of as it relates specifically to silver? Well, in the last week, we have seen hedge funds and money managers trim their overall net long position on silver by 3%. That brings down the overall percentage to 58%. So of those hedge funds that do have a position on silver, 58% are long. We continue to see this staircasing down, deleveraging of positions with silver, which essentially has meant the price has accelerated all the way down towards 9-month lows. Now, none of this will come as a surprise to you this week that we saw that post-FOMC sell-off after, of course, Wednesday's FOMC statement. We talked you through that in detail. Expect the metals, they can get a bid at the start of the week, an impulse move into Wednesday's FOMC statement, which is very often a bull trap. Traders end up getting their delayed confirmation. They FOMO in, thinking the breakout from the FOMC statement will be sustained. Subsequently, we see a bull trap, so the market fades that move. So essentially, sellers come back in, drive the price lower, and then we see later on in the week over Thursday another wave of selling pressure to the downside. Dollar accelerates to the upside, broke out to 1-month highs. In fact, that allowed us over our position on the dollar to bank over 600 points profit over our positions that we currently have open on the dollar index. So with that, of course, for every one lot contract that you'd be trading with a 600 point gain like that, that's $6,000 of profit. For every 10 lot contracts, that's $60,000 of profit. Now, we talked you through this in a lot of detail, what to expect this week in the lead up to the FOMC statement at the end of the week as well. Then as we go into the final week, next week of September, you're going to potentially see more end of quarter outflows, right? And then as we go into the first week of October, we have a 1 week long public holiday in China, thinner liquidity during the Asia Pacific for that whole week, which again often does tend to provide vulnerability to the metals. As we mentioned to you on the week ahead commodity report, for the last 9 years in a row, gold and silver have sold off over the month of September. This is very common. Last week we had quad witching, which happens on the third Friday of every quarter. We saw with that big liquidation across the board, anywhere from commodities to equities to cryptocurrencies, even at the start of this week, have massive sell-offs to the downside. And with that, the dollar, of course, spiked, breaking out to 1-month highs. Everything that we talked you through previously on the commodity reports there, where we were positioned long for the dollar, and now into the lead up of the FOMC statement, the usual breakout move into that FOMC statement has occurred, which has now ended up being a bull trap. Many traders get caught FOMOing in, and then you tank later on in the week after an FOMC statement. It's pretty much been like that for every single FOMC statement over the last year, that typically these moves get faded into the market, then reacts later on in the week, and metals essentially tank on Thursday, which is exactly what we've seen play out over the course of this week. So I hope many of you have been able to capitalize on that and really take advantage of everything that we've talked you through over the last few days as we prepared you for the month of September. Now, usually October is a better month for the metals. They tend to get better support once you get through the China public holidays. But be aware, month of September, not a good month for the metals. Typically, they're under pressure for gold, silver. This has been the case 9 years in a row now. If you know that, that will help you massively to get an edge. So, of course, this comes back down to having access to data, market intelligence, being aware of the statistics in the market, the facts. Alongside that, of course, know the macroeconomics, the sentiment in the market, understand fundamentals, the key major drivers that will have the biggest impact on commodities and cause the biggest moves. Alongside that, extremely powerful to be aware of the hedge funds, money managers, banks and institutions, their positioning in the market. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.